Coming to you live from downtown Detroit, this is Benzinga's PreMarket Prep. With your host, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I will buy the stock for a penny.
With everything you need to start your trading day.
Good morning, everybody. Welcome to this Monday edition of Benzinga's Pre-Market Prep. Spencer Israel, Joel Elconin, Dennis Dick, Mitch Hotch with you. Hope everyone had a lovely, relaxing Christmas holiday weekend. We're back in the saddle here for another short week. Of course, markets are closed on Friday again. But this morning, we got a lot of news for what is typically one of the slowest weeks of the year. We've got AstraZeneca moving. It looks like they're going to get their COVID vaccine approved over in the UK. We, of course, got news that the stimulus deal is going through last night. So the reopening trades on this morning. We've got Bitcoin just absolutely ripping, and the quote-unquote Bitcoin stocks ripping with that. So we'll talk all this. The SPACs are moving. So we got a lot to get to on our show, plus our guest. We got to go in for you. Gordon Johnson. We love Gordon, one of our favorites. He's the founder of GLJ Research. He will join the show at 8:35 and probably reaffirm his bearish takes on various stocks in his coverage, notably Tesla. And that'll be at 8:35. Before I throw it to Joel, I want to tell you all to hit that like button, hit that subscribe button, show us some love on YouTube. We appreciate that. Joel, what's the word here overnight?
In the green. Everything pretty much is in the green here, Spencer. Holiday weekend. A lot of people were doing not only buying Christmas shopping, but they were buying the S&P futures and Bitcoin. First, we'll go to the S&P futures. You had a little bit of a lower open, but you know what? Stimulus package, and they bought it right up. We took out the old-time high at 37.24. That was 1 week ago. Pre-market high 26.50. That low's way down there at 36.76. That's pretty safe for the day. So we'll keep posting new all-time closing high. That's not going to be too hard today. Above 12.75. Crude participating up 55 cents, 48.78. Gold in the red by 280 at 18.80.40. Silver, that's up 59 cents at 26.50 and a half. Let's just call Bitcoin up 4 sticks at 27,660. That's up $3,975. And we are all going to convince Triple D that he needs a Bitcoin cash account, because he had nothing to do over the weekend and he would have been in there buying.
I could have been trading crypto. My wife wouldn't have appreciated that, though, on my first 3-day weekend in forever, that I just sat there and traded crypto all weekend. So if I get, it's going to be very expensive. If I get one of those, I'm going to end up with a divorce if I start trading crypto all weekend. So we'll stay off the crypto. I obviously own Bitcoin. I'm playing the Kramer theme where he always says, own Apple, don't trade it. I own Bitcoin. I don't trade it. I don't know anything where it's going in the short term. I just keep saying the story, I think, continues to be hot in 2021. So I am staying long Bitcoin. I had multiple texts. Are you selling? Are you selling? Everybody, are you selling? Because they know the way I am. You know, I get up, gain really fast. I sell it. I mean, I'm up 60% in this thing in a matter of a month. So, do I sell it? If I was trading it, I would have sold it a long time ago, but trying not to look at it. It's in the retirement account. That's why I went with that QBTC, because actually in Canada, you could put it in your RRSP. That's why I went with that one for that reason. I figured I wouldn't look at my retirement account as much. So
I've seen what happens when Dennis becomes a Bitcoin trader, and I want to grab the screen for a second and show, because I've seen the future.
Okay.
I grabbed a screen. I want to see this.
Where did you get that picture from?
Don't worry about it.
Where is that from?
I have my ways.
There's something about Mary going on with that picture. What a horrible picture. I can't believe that shows up here. I think my wife put it on Facebook or something, and then it's out everywhere. Now it just got seen by you thousands of listeners out here. That's a crazy. Yeah, that's my something about Mary moment. It looks like there. That's crazy, man.
That's That's
called not sleeping. I think that was when we rented the camper and we didn't have, really showers or anything. You're just like in the camper for 3 days and no haircuts and COVID times. And yeah, that was not pretty. So I don't need to see that anymore. Thank you very much, Spencer. And yes, that is what I would look like if I was trading crypto 24 hours a day, 7 days a week.
We got some new signs, Spencer. Could you fill us in on the new signs?
Sure. The newest one from this morning is that one that's to the, I guess, left to the right. I don't know. CCP, you know me. And I'll probably have to take down the Christmas one, right? Because we're after Christmas. So I've got a couple more in the hopper here.
I like the will the Apple cars have windows now. I didn't get that joke right off the bat, but it was
good.
that
was super low hanging.
It was good though.
I told that one in my family, and they cracked up. And then,
did they all get it right away?
Yeah. But full disclosure, I had to tell them that it wasn't my joke, that it was Spencer's joke. For full disclosure.
It was a good one.
It wasn't just my.
Did you make that up, or did you get that from somebody?
No. I thought of that, but so did everyone else. That's like a pretty low hanging fruit joke to have, right? I saw it on Twitter. I saw it on Twitter after I thought of it, so it was an easy joke if everyone else.
Dennis, quickly before we get into the markets, market structure question for you.
Oh no, it's too early for market structure. Okay, quickly.
Do you think that the Bitcoin would be exactly where it is right now if futures traded over the weekend?
If Bitcoin futures were still trading over the weekend?
Yeah.
Yeah, because there's not a lot of volume. I don't think Bitcoin futures drive the price. I don't think it's a driver. I think it's a trailer. Where, the S&P futures drive price. I don't think Bitcoin's at a point. What's the volume on the Bitcoin futures? What was the volume Thursday? Go back.
I mean, since it started trading last night, it's 10,000.
It's so small.
But it's a full contract.
It's a full contract, so it's like one full Bitcoin you're buying. But I don't think the Bitcoin futures drive the price. I think it's driven by all these other exchanges, and the Bitcoin futures is simply chasing the price around, in my opinion. And that's why it's not the same as the S&P futures, where the S&P futures overnight are a complete driver. First thing to open, at 6 o'clock on the Sunday, everybody's looking, everybody's trading them. So I think that's the difference, is that I think the Bitcoin futures, there's just not enough volume to be the driver yet. So that's my
point. A driver. I was just thinking of like an arb, for any arbitrage for price discovery. But no,
the bots are there's probably a lot of bots on the arb side of that. So and people have asked me, why don't you do the arb? I mean, I don't know. Maybe there is some opportunity there. I've never really looked into it. Again, if I start trading crypto, my hair is going to look like that. My hair already looks bad enough.
All right. Well, for Bitcoin, you got to gap up on the chart, but not on your Coinbase charts. Big old green candle here.
Yeah.
There was dips in there too to buy. I know there was, because I was watching it a little bit. But let's just keep your high 27,810. And it's funny. Did you get a holiday message? Our buddy James Putra.
Yeah.
Did you get a holiday message from him?
I did not. I don't.
I did. I didn't see it.
If I did, I didn't see it. So he likes you better.
I guess
from TradeStation.
I mean, let's not be surprised.
You also subscribe to TradeStation.
Okay.
I do not. That probably helps.
He said, happy holidays. A nice present would be Bitcoin 30K. And this was on Thursday.
I was tweeting her out. It looked like it was going to try to get there. It was going up $1,000 every 5 hours there on the weekend for a while. It got to 28,000 though, and then they pulled the rug out from under it just temporarily there, and it actually
right back up there. It's right back.
Yeah, went right back, came right back up. So, buy the dip wins again. We went from 28,000 down to the 25,000 handle there yesterday early morning, and came right back. So, buy the dip.
All right, Spencer, SPACs, Bitcoin stocks, BABA, reopening stocks. Where we going?
To talk about.
I just want to mention these Bitcoin stocks quickly, because they are the ones that are atop your leaderboard here this morning. You got Marathon Cat Group. You got Riot Blockchain.
Yep.
You've got BTBT is running. That's Bit Digital.
Wow.
You've got, what else do I see?
MSTR
is running. MAGS is that maybe also a.
Do you think that's Bitcoin?
That's not Bitcoin.
No, I was just writing that one down because I was like, I didn't know that was Bitcoin. I'm writing it down. I'll take that one off.
You've got, like like EQOS, for example, Diginex. That's
I mean, you have Square and PayPal bouncing here too. So
right, them too.
They're indirect plays, but we know they've been getting the run because of the Bitcoin love. Square had an ugly day on Friday. Just if we want to talk a stock here for a second,
Sure.
Square, actually, I'm losing track of days because of the holiday. The ugly day was actually Wednesday, and Thursday trying and was bouncing around.
Look at that.
Yeah, it was interesting. On Wednesday morning, they actually had a huge sell imbalance, and they opened it late. They were trying to get it open. Sometimes they can't get these things open at 9:30, and it was 2-3 minutes late. So then I even had an order to buy, and I was like, you know what? I pulled my buy order on Square to buy the open because the S&P futures were way up, and then Square was opening down. And I'm like, usually that's a natural herb where you could maybe make some money, but it took so long to open. I was like, there's too many people have looked at this now. So I'm like, this is going to be crowded and this could actually tank off the open. And sure enough, it opened at the high tick. So I pulled my OPG order just in time. And then the stock opened and they puked it. And they puked it all day. They screwed everybody who bought that on the open. The OPG traders, we call them opening only orders. And if you look in that first bar, it went straight down. The reason for that is completely that the OPG traders were buying the open and they pulled the rug out from under them. And I would have been in that. The natural herb was to buy that open, and they took it down the other way. So you got to be careful sometimes just buying below fair value. It doesn't always work. And tech was kind of starting to roll over already. So they open the stock late. A lot of times then there's too many people looking at it. And then it gets crowded, and there was too many people that came in to buy it, and then they pulled the rug out. So now it gets the bounce. It's bouncing a bit. Is the Square story over? Probably not. Is the Square story due to cool off? I think so. I would actually think if I was a trader, I'd be a seller of this rally in Square this morning because we're a little bit heavy. Tech's a little bit, they're going into the SPACs. They're going into the reopening. Square is getting some love because of the Bitcoin move, but I think it's getting dragged up with it. I don't think Square is going to keep ripping higher, at least in the short term here. So my opinion is sell this rally in Square. Short term.
If you want to sell on weakness as opposed to strength here, 238. I mean, kick me aside the head here. Your last three daily lows. Yep, 3809, 3833, and 3809.
So it's up $5 though now. So this morning. So you're saying, if it pulls back down there to sell it, or you would sell this open?
Both.
So you get the nice pop. I think, I don't know, if all this Bitcoin, obviously it had a huge move, and you're seeing some big runs in the individual stocks that we already talked about, like the Maras and the RIOTs and the MSTRs. I feel like it's a little bit of a profit-taking opportunity for some of these, especially the Square and the PayPal, because they were already wanting to roll over. Now they get this Bitcoin pop, and it's like, oh, that's going to get some people out. But, we could be wrong. If they make new highs, and PayPal isn't far from all-time highs, I don't short stocks making new all-time highs. So I would rather that it starts to give it back than opposed to just trying to play the open.
I agree with that one. Andre Noble here, new to the chat. Do you guys think banks will squash the mini rally in Bitcoin when the market opens? I don't really think so. Do you think so? I don't know. How active are the banks? How active are the banks?
I just think people are, a lot of people believe that Bitcoin is coming out and is going to replace the financial system, and this is going to be what we're going to transact in. I don't believe that. I'm long Bitcoin for speculation. I'm not long Bitcoin and for the story aspect of it because it's a good story. But I do not believe, I want to be just clear here, I am not a supporter of the theory that we're all going to be transacting in Bitcoin, and Bitcoin is going to be the future, and that dollars are going to be worthless. All assets relative to the US dollar are inflating right now. I mean, you see even getting away, like we know real estate has been, but stocks, is an obvious case. But then you can even go as far as, looking at collectibles. The collectible market has been so hot because people are just not wanting to be in US dollars that are obviously getting printed like crazy. So they're moving into hard assets, and Bitcoin is seen as a hard asset. Is it really? I don't know, but I think the story is still there. But the only reason I'm long Bitcoin is for the story, because I think that people are going to continue to talk about it, and that is going to continue to drive demand. As I just turned to my CNBC screen, it's on CNBC right now. So until I start to see this story take a significant cool, and maybe it's going to be regulation that cools it off. That could happen, but I don't think that's coming in the next little bit here. So I stay bullish Bitcoin only for that reason.
Boy, oh boy. The banks being involved in it is one thing. Oh, I wanted to give one somewhat bearish indicator. You remember when I talked about the gas station that had the Bitcoin machine? Remember that? And I thought it was bullish.
The ATM, yeah.
Yeah, it's not there anymore.
Hold it.
So if I use that as my buy signal, then I should be using it as a sell signal. Another $5 tip here. We got, man, someone must have got some money for the holidays here. Asking about NRGU.
Right. So maybe we can just talk about oil stocks in general, because NRGU is, and you can pull the chart up, but it's just a way to play oil. It's a leveraged ETN that holds the 10 largest U.S. oil stocks. So Exxon, Chevron,
It's triple levered.
EOG, yeah. So it's triple levered. So really, NRGU is really a commentary on where you think oil is going to go. You think oil is going to go
All
up?
these things, Spencer, are just a way to get around margin requirements. Like, I can't believe the regulators actually allow this stuff, because here they are, they're very strict with margin limits in certain accounts, and obviously retail margin limits, and then they'll let people come into triple levered stuff. Do they limit, like, if you got $10,000, can you buy $10,000 worth of the triple? I don't know, because I'm not in a retail account. Is that the case? Can you buy not only $10,000 worth? You can obviously buy $10,000 worth of it, but can you buy $20,000 worth of the $10,000 triple levered NRGU? Can somebody answer that in the chat? Because I've for years I've not understood why they even allow these products to exist.
Because they can. I mean, you use some of them. You use the ones for FANG, I thought. So people who know how to use them can use them correctly. It's a question of, does everyone know what they're doing and know how leveraged ETNs actually work? For example, they're unsecured debt obligations, right? So they're really more like bonds in a sense, but they are leveraged and they're reset daily. But on that margin thing, I just saw a stat this morning and I can't find it now, that there's a record amount of money on margin right now. Gosh, where can I find that stat? It's somewhere in my email.
While you're covering that, I looked at the chart of that thing, and obviously if it's pegged to oil, I'm not going to really give you big numbers on the NRGU, because it's going to follow oil. And the high of the move's been 49.43. It was backed up by a 49.31 high. So there's your major resistance if you want this thing to go back to wherever it was, $70, and then high close of the move right there, 49.24. You just have to think that if they brought oil this far in this rally, in this environment, they're not going to take it to $50. I mean, I don't know what course of it's going to go up and down and zig and zag, but that's a big number. And you just got a feeling, they're just going to squeeze people that are shorted up there. So keep an eye. You want crude to keep on going. You want it to clear that double top, kiss 50. If not, it's just kind of creeping up here. Good support at 47.5. So use that to trade your NRGU. It's because that's going to be the leader for it.
Right, here we go. I found it. It's from the Wall Street Journal, and they're citing data from FINRA. So FINRA says that investors borrowed a record $722 billion against their portfolios through November, topping the previous record of $668 billion, well, about $669 billion.
It's all scary.
In May of 2018.
Yeah, that's all scary. It makes me bearish when I hear stuff like that. But
yeah, so
that's all scary. But again, just going back to this triple levered thing, is there any purpose to these other than to, get 3 times exposure? Is there any other purpose? Because this looks to me like all these triple levered products are just a way to get around margin requirements. And I don't understand why that's allowed. I honestly don't. I haven't from the beginning. So I do trade some of these things. I like them as trading vehicles. Professionals can trade them. Retail can trade them too. But I'm just saying, if you've got somebody with a $10,000 account and they're throwing, margined up $20,000 worth of NRGU in there, and I'm not sure. Again, I don't know if you can. I guess it depends on your broker. But if you can put on, 2 times, what that you're levered, and then so you're actually 6 times levered on your account. I mean, if you're 6 times, then you think about that, you get a 18% pullback, you lose your account.
Look at the monthly chart on that, Dennis.
Right. I mean, they all look the same. They all
That
look
was $1,100.
Yeah, I know. It just got destroyed because it was triple levered, and then oil went down, and they continue to just get dinged. We know these triple levered products.
So
when they start going down, they get hammered.
Bottom line on all these leverage products, whether it's a bullish product or a bearish product, these are not long-term buy and hold instruments.
No.
It says 3 times levered. That's for a specific day. That's for a given day. That's not that, and it resets daily. And so if you just trust me in that, these are not long-term investments. At the most, they should be held for like a swing trade. At the most, if you are disciplined.
They're day trading vehicles, daily rebalancing.
Right.
They aren't designed to be held for more than 1 day. So people think that if they buy the triple levered oil, and if oil goes up 50% next year, I'm going to make 150%. And that does not happen, because it's about the path that it takes, because they're daily rebalanced. Mm-hmm. So, you always are buying high, because these things have to rebalance. What they in essence have to do is, if oil's up, they have to basically, they do it through swaps, but they have to basically buy more on the days that it's up and sell more on the days that it's down. So what ends up happening is, over time, they're always buying high and selling low. Those products are actually doing the exact opposite of what we preach on this show. By buying the dip and selling the rip, they are always buying the rip and selling the dip. And that is why they usually outperform over the long term. And if you look at NRGU, or USO is a great example too.
Yeah, we can just do that.
But USO isn't triple levered. That's just that's got that. The USO is a different product, because we're talking contango over there, and you've got the cost of carry that is baked into that, because it's not free to store oil. I mean, we were talking, jokingly, when it went negative, we were going to dump all the water out of our swimming pool and put oil into it, because it's very expensive to store it. And that's why the USO continues to deteriorate over time, because it's trying to hold, it's not holding the physical barrel. So it has to continue to roll over the contracts. They used to do it month to month. They've changed that, because it was just eroding capital so quickly that now they go out a little bit further. But in any essence, that they can't take physical storage of oil. So they've always got to roll it. So they're always losing on the rolls. And that's why it continues to underperform over time. So I've always said, if you want to invest in oil, invest in the oil stocks, because it doesn't cost any money to have the oil in the ground. And then they pull it out of the ground and they get rid of it. USO is the opposite of that. They're always going to get burned on the rolls. So your oil can be up 10, 20% year over year, and USO is likely to underperform it substantially. It might not even be up. So again, USO is fun to day trade, but I would not have this in my long-term portfolio.
We should bring Luke on if things get a little bit slower, because he did buy the USO. Remember when I think when we had him on the afternoon show a little bit, and then that was before it went negative, and then it had they had a reverse split. But if you just, it hasn't even doubled off the April low. And whereas, crude oil, I don't know I use $10 as the real low. I don't go with that artificial low.
The negative thing was just BS.
Yeah. So
it
you
happened,
look at that, that's a lot more than doubled off the low. On the
and
month,
the USO is only doubled off the low. Is that what you're saying?
That's what I'm trying to say.
Yeah. Yep. So it's massively underperformed. Yeah. So if you use $10 as a low, where are we on crude right now?
48.5.
Yeah. So you're up 4 times, and USO is only doubled. Massive underperformance. You're in the wrong vehicle. When you're investing in oil for the rally, the USO is not the vehicle to use. I mean, if you were looking at some of these other oil stocks, and obviously ExxonMobil, you could say, oh, it's the same. It hasn't but it doesn't go down as much either, because it's more conservative play. But there's a lot of these little oil companies that have done substantially better. I mean, you could look at a rig, and obviously we all thought rig was going out of business, 65 cents to $2.20. Yeah. I mean, if you wanted to make that bet that oil was coming back substantially, the little oil companies is probably going to benefit the most out of, but just going with USO blindly. And this is what you see newer traders do all the time. Like, oh, I'm just going to buy USO, and I can hold this forever. And I know oil is eventually going to be $100 again. Well, it depends how long it takes to get it there, because over time, and somebody's in the chat very right, saying it only works in backwardation. Backwardation's rare, where you've got the front month, and it's all about the that rollover we're talking, you know, they have to roll the contracts, and they were doing it month to month, but they're not doing it as often.
And then,
and
then
lose on
they
that.
switched out of that. You know,
they were trying to do everything because it was just burning them. They were like eroding the capital so quickly.
They changed the rules on the fly. That's how crazy.
You gotta love that.
They changed the whole, from the prospectus. They had to amend it quickly because they was trying to, like, this negative thing was killing them.
Mm-hmm.
So the negative oil was like, holy crap, we're selling, you know, negative, and they have to go buy positive. I mean, that's why they had to get out of that, and they're obviously, you know, trying to restructure it. But the whole product is structured, you know, even just this idea of having to buy and roll it all the time. You've got the cost of carry. They are always the victim of the cost of storing the oil. They are the victim of that. Is oil going to go, you know, the cost of carry going to go negative? It can at times. But for the most part, it's usually in contango where the front month is worth more than the current month. And so you're always buying it. You're selling that current month so you don't take physical delivery. And then you're buying a more expensive month to keep the same exposure. And you're always losing a little bit of oil in that way because you're not going to be able to buy as many barrels when you're selling at a less price and then buying it ahead. And that's why it deteriorates over time. It's a good day trading vehicle, but that's it, in my opinion.
Dennis, you're complaining about the regulatory rules in the U.S. This is JB Betts just popped this in on the .com chat. There are some ETFs in Finland that offer, and I don't know if this is right, but he's saying 9 times levered QQQ. Maybe he's exaggerating.
He might be right. I don't know what's in these other countries.
Other countries are a lot more lenient than the US in terms of what
the whole thing with oil too. I mean, you know, since everyone going to be driving electric cars, right? So what the primary use of oil is. So I see a new gas station. That's why I hate
oil long term.
That's why I see a gas station, you know, a new one going up around here. I feel like, you know, saying like, what are you doing? Unless there may be electric charging stations that people are putting in, but I've seen on a couple, you know, heavily, you know, traveled areas, you know, it looks like a new gas station going or remodeling it. I don't know. I don't know about that. I'd put an electric, you know, get a what are those electric charging stations? Who are they, like BLNK, a couple of the companies to do that? If we're really going,
well, Tesla's doing the most. I mean, out of the electric charging stations, it's Teslas you see everywhere. The infrastructure they've put in place. I mean, that's why you could say that Tesla's way ahead of everyone else. Because I don't know, are you going to be able to put your, you know, EV vehicle that isn't a Tesla? Are you going to be able to recharge that at a Tesla station?
I have no idea.
At a cost? I don't have the answer to that question. I don't know. But I'll tell you, when I look at, you know, the charging stations, they're all Tesla around here. Like Tesla's, you know, right on there. So if that's only for charging Teslas, that's why maybe, okay, well, I'm going to go buy another EV. This is a good argument for Tesla. I'm going to go buy another, you know, EV car. Where am I charging it up? Because can I go to the Tesla supercharge station, or do they charge me a ridiculous premium because it's not a Tesla, or do they not allow me? Does it not fit? Like, does that, you know, pump not work in there? I don't have the answer to this question because I don't have an EV car. So maybe somebody in the chat knows, but I see these Tesla charging stations everywhere. I don't see normal EV charging stations in that many places. Obviously you can plug it in at your house, but when you're on a long road trip, how's that work? Can you go to those Tesla charging stations, like with a non-Tesla vehicle?
Well, let's wait and talk about that with our guest at 8:35. But let's talk about Alibaba for a second. So somehow we've gone a half hour and not mentioned Alibaba. They are pulling out the stops here this morning. They announced a buyback, which is what you do when you want people to maybe distract people from what's going on in the headlines. They increased their buyback program to $10 billion from $6 billion. Typically, this is seen as a something you do to maybe juice your stock price. It is not happening here this morning.
I mean, okay, so I had the question. You knew I was nervous, and this is 235 in the pre-market on Thursday, losing track of days here over the Christmas holiday. You knew I was nervous. I gave the reason I was nervous because I don't know what the regulator is going to do to this company. So are they, you know, could they potentially arrest Jack Ma? It could do anything over there. Anything can happen. Karen Feinerman had a great tweet too. She was saying the same stuff that I've been saying. I'm nervous because this is a huge unknown. We don't see a lot of Chinese regulation. So they're coming and hammering a stock because they, you know, they're pissed off at Jack Ma. And how far do they carry it? Can he get out? Can he get back in favor with the regulators? That's the question. It's not a question whether this is a good business or whether it's cheap or whether any of that. I mean, yeah, Alibaba is cheap. Yeah, it's a great business. But what if they come in and just take it to an extreme and start, curtailing stuff or even shutting it down? I mean, they can do anything over there. They can do anything in China. So I think they're still out to get them. And until I see, some type of concessions, like something, and it look like, they're talking about the Ant Financial that they're going to comply and do whatever they can with regulators, but they control these companies over here. It's a much different than being in North America where, Google gets antitrust looking at them and they don't even care. Here, it's a big difference. They're not antitrust, but looking at, from the monopolistic perspective. But I'm scared. I'm scared to own Alibaba. I sold half of my shares on Thursday. I've had it for a long time. I've had it for years. I sold half of it on Thursday in the hole, sold the dip, because I'm like, I don't know what happens here. What if they come out and they say, okay, we're gonna do some type of serious regulation where they're not gonna be able to sell as much stuff, or curtailing the revenues in different ways. There's so many things that could happen here, so many unknowns. What's the likely scenario? What you were saying, maybe they, maybe Jack Ma, they get back in favor and maybe, the stock eventually bounces back. But I don't know that for sure. I'm definitely not adding to my position. I sold half because I don't know what to do. I seriously don't know what to do, so I sold half. Somebody said sell half, and that's exactly what I did. I sold half. I'm very nervous.
Didn't I say that? I may have said that.
You may have said that. There was multiple people in the chat that said it too, and I was like, you know what? That's maybe the play. Sell half because I don't know what to do. I think the company is cheap here, yes, but it's not cheap if the regulators come and start hammering them or even potentially shut them down. So I don't think they're going to do that. But I don't know that they're not going to do that. And that's why it's just not a slam dunk to buy it. If this was happening over here, I would say, yeah, I'm backing up the truck and buying Alibaba. But different ball game over there. They don't even have, think about the regulation, Joel, like in Spencer, like that we don't even have a history of, what this happens because they don't usually hammer on companies like this.
Yeah, there's no precedent. That's true.
There's no precedence for this. So I have no idea. All I know is the unknowns here makes me nervous. And I, like I said, I'm in from Alibaba. I think I bought it $151, and I think I bought it a while ago, like a couple of years ago.
It hasn't been 151 in a long time.
I think in late 2018, early 2019. So I've been in it for a couple of years, and I'm disappointed, obviously, but at the same time, I'm like, I don't know if they don't come out and put some charges or something, and this stock gets hammered for another $30 or $40. That could happen too. So I don't want to see my gain go away. At the same time, I don't know if I want to sell it all because this could just, Jack Ma could come
need
out
the news flow to turn around
with the regulators.
Yeah, you need the news flow.
It's all the news flow. Yep.
Yep. Here, and I this was my stock of the day on Thursday. This is when they suspended the Ant Group IPO, right here. And then I wasn't following this closely, but they hammered this thing on Singles Day. It was obviously the 10th for us, the 11th over there. And then it just kind of moseyed its way back up. And then we talked about it technically, just hanging out at the low of the move, right? And then you get the news overnight. Tough call here now. I would say I don't think you can really – you got to wait for the news flow to change. And I think I would maybe rather buy this, above, the high from Friday, $29.90. Than just trying to take a stab here. I think this low, 1123, I think you're going to see people wiggling, trying to buy ahead of that low. In fact, you got down in the pre-market to 1320, and it got a good bounce. So big volume on Thursday. I mean, people like you, Dennis, people were just like, I'm done. It traded 140 million, and it averages between 10 and 12 million. So big investors were just saying, I'm done. There's too much known here. I'm out. I'm done with Alibaba until I get more clarity.
Normally, 90% of the time, I would say that's the buying event. That's the capitulation. Everybody says, I got to get out, and, all the pains in the trade, and that's it. But in this case, it's just a different animal because we don't know what is going to happen. You can't take the company's fundamentals and look at them right now. It's nothing about the company's fundamentals. It's all about Jack Ma pissing off the regulators and how much damage are they going to do to the company before they come to an agreement. So that's the unknown. And you know, maybe the regulators, like we just, it's one or the other. You know, they're gonna say, okay, yeah, we've come to an agreement. Jack Ma's back in the favor, and he's back being in the good camp here with the regulators, and you know, the company's going to be allowed to continue as it is. Or Jack Ma is going to fight a bit, and the regulator is going to win if it's the case. You know, you're not going to beat China regulators here, and the stock's going to continue to get hammered. So, I mean, that's what it's all about. It's not about Alibaba right now. It's about Jack Ma.
Right.
Just hanging up here. Oh, we got our guest. Is
cool? Joel, go ahead. What were you going to say?
I'm just saying we're just hanging out here, comfortably just near the highs of the session. 27, 37, 22 up 27 handles right near that pre-market high. So no backing off yet as we speak. And that's about it. Bitcoin just hanging up near the high, up $4,060, 27,745. We could see that 30 pretty soon.
All right, we got our
guest now.
Yep, I can't see him, but I know we can hear him. Gordon Johnson from GLJ Research. Gordon, Merry Christmas. Good morning.
Hey guys, can you hear me?
We can hear you. Yep, we can't see you, but we can hear you, and that is enough for us. Gordon, do you have thoughts on the regulatory landscape potentially changing in China and what that can mean for any of the industries that you focus on? I know you're big on solar.
Yeah, so I think that the crackdown on Baba, the defaults that China has let happen this year, and what seems like is increased scrutiny around regulatory issues, I think has negative implications for some of the solar sector stocks we cover, specifically Jinko and Daku. I'm sorry, Jinko. We don't cover Daku, but Jinko and Daku have been particularly weak this year. I'm sorry, particularly strong rather this year, very strong this year. But over the past few days, they've sold off. And if you look at Trina Solar, JA Solar, and Longi, which all trade on the Chinese stock exchange, you've seen some selling pressure overnight in those stocks as well. So I think if you get a tech sector sell-off in China due to heavy scrutiny and China's unwillingness to let anybody grow to too large of an extent, there's some suggesting that the Chinese government could go as far as forcing Baba to return Ant back to shareholders. I think you'll get pressure in some of the other quote unquote tech companies, and specific to the ones we cover, that would be the solar companies.
Yeah. And then, so on solar here, maybe let's go to solar, and then we can pivot to other areas of your coverage afterwards. But it's been a very good year, as you mentioned, Gordon, for solar. Just look at the TAN ETF, which is one of your leaders, one of your best performing ETFs of the year. What is driving this rally here? Is anything fundamental?
No, in fact, the fundamentals for solar have been pretty horrendous this year. Jinko, if you just look at like Jinko Solar, Canadian Solar, you look at Solar Edge, these are three stocks that have been extremely strong. Their earnings trajectory has turned significantly downward. However, I think what's driven the rally in solar is three-pronged. Number one, the strength in Tesla shares. And I think a lot of retail investors speculating in other areas that are similar to Tesla. Not that they're really similar, but people look at Tesla as a renewable play. So you've had a significant amount of speculation in renewable stocks. And I think that that's why you have such strength in the TAN index. Number two is ESG flows, environment, social, and governance, funds, money flowing into everything that's seen as renewable. And as you know, the Fed is printing literally $4 billion a day, which it's indirectly dumping directly into the stock market. So there's a perpetual thirst of money looking for new investment. And I think that, the creation of all these ESG funds has, created fund inflows into solar stocks, irregardless of fundamentals. Fundamentals just don't matter right now. And then I think number three is, Biden winning the nomination and the assumption that you're going to get a Green New Deal, which we can go into why we think that's completely false, why we think it's, less than a 5% probability, despite the fact that we think, not the fact that despite our view that the market thinks that's more of like a 70 to 80% probability, as well as, perpetual comments from our peers with respect to China. Xi Jinping came out with, targets for 2030 and 2060, where he says by 2030, their carbon emissions will peak, and by 2060 there won't be any more carbon emissions in China. Xi Jinping has notoriously fallen far short of all of his renewable goals. But my point is this: in 2020, you had a situation where you had fundamentals collapsing, but people are looking to the future. And because you have money searching for, stocks, essentially, you had solar stories that I think pushed money into the stocks, irregardless of the fundamentals. I think in 2021, you're going to have to see some fundamental performance. And I think that's where you may see disappointment.
We're on the line with Gordon Johnson from GLJ Research. What about the move here in the steel sector, U.S. Steel in particular? Wow, almost got to $20, pulled back. $5 low during the financial crisis. Quite a run in U.S. Steel here. I guess anticipation of a lot of building going on once we come out of this pandemic, in full force. Talk about the rally and perhaps the future course of U.S. Steel and other steel makers.
Sure. So we upgraded U.S. Steel to buy actually around $12 with a just over $17 price target. And we upgraded Cliff to buy, I think, around $8 or $9 with, I think, around a $14 price target. So here's what's happening in the steel space, and we're still bullish still. Effectively, you had Cleveland Cliffs buy its customers. Cleveland Cliffs bought ArcelorMittal US and brought AKS. So now you effectively have a duopoly in the steel market. And as a result of those purchases, you have one guy controlling quite a bit of steel capacity in Cleveland Cliffs, and they've kept that capacity effectively idled. A lot of the capacity at these two steel mills idled. So as a result, you have a shortage of steel in the United States. Against that backdrop, you also have massive strength in steel demand in China. So you've seen, and that's due to China's big stimulus. When China stimulates, it goes towards mainly one thing, that's building, empty office buildings to the sky, and homes that nobody's buying to the sky. But that demands a lot of steel. So you have crude steel production in China looking to be over 1 million tons, which is way above what most people expected, particularly in a pandemic. So steel prices in China have been strong. The point is, U.S. steel prices were very weak. They're around $400 per ton. They're now about $1,000 per ton. The problem is steel prices in China are very strong. So mills in China aren't incentivized to export their steel outside of China. They don't export directly into the U.S., but when they export into Europe and other countries, that causes those mills to export more into the U.S. So if things are going well in China, things go well globally. So you have a lack of steel availability in the U.S. exacerbated by limited imports due to strength in Chinese steel prices, which has caused a massive increase. I mean, I'm talking about over the past few months, steel prices in the U.S. have gone from 400 to over 1,000 of steel prices in the U.S. and optimism in the steel stocks. And based on our checks, you're not really going to get any import relief in the U.S. until late 1Q at the earliest. So we think this run in steel prices in the U.S., which clearly isn't sustainable, but could be sustainable a lot longer than people expect, still has legs to go. So we think this run has legs. So, we're still quite bullish, actually, on the steel stocks, U.S. Steel and Cleveland Cliffs, both of which we have a buy rating on.
So that was my question, was which ones is going to be X, CLF, and any more, or just those two in particular?
Well, we also recently upgraded Fortescue to buy, and that's due to iron ore prices being extremely strong. Now, iron ore prices have traded off over the past few days. The Chinese government stepped in and further cut the lots with which you can bet or speculate in the iron ore market. But the reality is, in our view, strength in China is just too robust right now. And the seasonally strong period for iron ore in China goes through March. So we think iron ore prices in China are going to continue to have or iron ore prices overall are going to continue to have a tailwind due to strong demand in China, And we're looking at the monsoon season in Australia right now, where you're going to get some disruptions. And you've had some issues at Vale with respect to dam issues, potentially further issues with respect to the big problem they had before, the catastrophe they had before. So we think iron ore prices still are going to have a bid to the upside, despite China's efforts to temper prices downward. So we're actually bullish Fortescue as well. We'd be long that stock as well. We have a buy rating there.
Yeah, FSUGY is that ticker that trades OTC markets. All right, Gordon, let's get to the elephant in the room. Tesla, you've been bearish this all the way up. A lot of that analysis is just stemmed from a fundamental point of view on the stock, looking at the company's balance sheets. Tesla clearly does not trade based on fundamentals. I mean, are you changing your thesis at all? Because it's come an awfully long way this year.
Right. But, one thing I'll note is over the past year, even the consensus estimates for Tesla for 2020, 2022, and 2023 have come down. Look, Tesla is not attached to reality. It's not trading on facts. It's not trading on fundamentals. I believe we're in a EV bubble. It's not just Tesla, it's NIO and every other EV stock that has rallied massively. But the reality is, never in history has a stock detached from facts and stayed that way. Eventually facts matter again. And I think there's a few things, right? If you look at what's happening in Europe and China, right? When competition entered Europe at the beginning of this year. Tesla's market shares went from 33% to just over 10%. They've lost significant market share. That has nothing to do with the pandemic. People are just buying other cars. If you look at VW, right? Volkswagen, Norway, Netherlands, Spain. The reason why we use those three markets is because they report registrations daily. They're the only markets in the world that do that. The VW ID3 is outselling the Model 3 in Q4 by nearly 3 times. They've sold nearly 3 times more ID3s and ID4s than Model 3s have sold in the fourth quarter. It's fair to say they're crushing Tesla. If you go to the Chinese market, Tesla's market share peaked at 25% this year. It's now 12.5%, nearly, cutting more than half or roughly half. So competition has arrived in China. Tesla's getting crushed there. If you look at recent reports in China, right? And in China, keep in mind, we're talking about a communist country where everything is managed that's reported by the communist government. There was a report that came out over the weekend that Tesla's putting in defective parts. It's alleging, rather, that Tesla's putting in defective parts. This is a report that came out over the weekend into their Chinese cars. There's been a number of other reports that have come out that have alleged defects in the cars that Tesla's producing in China. It looks like China is highlighting a lot of the things that have been alleged in the U.S., but the NHTSA and the NTSB hasn't looked into. My point is this. The stock price is detached from reality. A lot of people have all their savings into Tesla stock, but you got to know what you own, because at some point, right? Keep in mind, over the 30 quarters roughly, Tesla has been a public company. Excluding credit sales, they've only been profitable in 4 of those quarters, the most recent of which was 3Q19. And those credit sales drop significantly next year and go away, we believe, altogether in 2022 because everybody's selling electric vehicles. Let's take a step back, right? Look, one of the telltale signs of Bernie Madoff's fraud was impossibly consistent returns. And we're not alleging that Tesla's committing fraud at all. That's not what we're alleging. That's not what we're saying. But if you think about it, right, Tesla has cut the prices on its cars significantly this year. And a lot of the Tesla bulls argue they cut prices to match, to make demand match supply. But any company that does that sees margins fluctuate significantly. Tesla hasn't seen that. So another argument is Tesla's cutting the prices to match costs. But any company that does that sees their inventory and backlog fluctuate significantly. If you cut prices to match costs, right, your inventory should collapse. Tesla had the second highest inventory ever in Q3 of 2020. So we believe what's happening is they're using these 100% regulatory credits, the bulk of which more recently have been recognized, we believe, before they've actually sold them or before, FCA has actually purchased them. We're getting into the weeds here, but the point is they're using these regulatory credits and this FSD revenue. Keep in mind, they're recognizing revenue on full self-drive. Full self-drive does not exist. So people are buying a product that doesn't exist, vaporware. There's potential that you could have regulators come down on them for that. And with their S&P inclusion, a lot of these things are going to be more scrutinized, i.e., does this company make money selling cars? The answer, excluding regulatory credits, which Tesla itself says are one time, is no.
All right. So, Gordon, what would it take then? What would it take? And I know I've asked this question before, so I'll ask it again. What would it take for you to change your mind?
What would it take for me to change my mind? For Tesla, look, when you say change my mind, even on consensus numbers next year, right? 2022 consensus numbers, Tesla's trading at 100 times earnings, right? The auto industry on average trades at 5 to 6 times. So Tesla has a problem with respect to, number one, they need to show me they can profitably make cars, but their profit needs to grow exponentially to justify the market. And the other thing, so that's number one. The other thing, number two, is, everybody says Tesla has a technological advantage, but the reality is, they just announced over the weekend that their, the Ford 4620 batteries, Panasonic is making them. The idea was that, they had a battery day that suggested they were going to, produce these batteries, and that they had some kind of special technology they were going to put into these batteries. And now it comes out that actually Panasonic is making them. So the point is, number one, we think there's a lot of myths and misconceptions in the stock that are going to bear out in 2021, right? In 2021, either their sales are going to grow significantly and they're going to show significant profit improvement, or they're not. And so what would make me turn more bullish? Well, their earnings start to grow exponentially to justify their current multiple, number one. Number two, if they start to gain back share in Europe or China, or their U.S. sales pick up significantly, all of those things of which we think are not going to happen. And I think number three is, what does this company look like excluding regulatory credit sales with respect to profitability, i.e., can you make electric vehicles being Tesla profitably? Look, again, we think it's in a bubble. We think that a lot of people own this stock because the stock price keeps going up. When you take a step back from that and you simply look at the fundamentals for Tesla are not improving. They're getting worse. So I think that's something that, they need to show improvement on for us to get more positive.
Gordon, before I let you go, why do you think that this stock in particular has such a feverish fan base, even before this year, where this has always been a stock that you either hated it or you loved it? There was really very little middle ground, and that's been magnified, of course, in 2020. What is it you think about this company, about this stock that the bulls just love so much, more than any other stock out there, it seems?
Well, I think it's because, you have a CEO who's willing to make very aggressive promises perpetually. Again, they had a battery day where they introduced a battery that they were supposed to have, they were supposed to be making, and all the bears said, Tesla's going to buy this battery from someone else, and everybody else said no. They're making the battery right now. They're producing it right now. That's completely not true, based on everything we know as of right now. Panasonic makes the battery, and Tesla buys the battery from them. But you have a CEO who's willing to say, like for instance, 2 years ago, right in 2018, Elon Musk said, in 2020 we're going to produce around 750 to 1 million cars, at least 750, but we'll get to 1 million cars. Over the weekend, he put out a tweet saying, if we push hard, we'll get to 500,000 cars of production, proving everybody wrong. It's like, he continues to move the goalposts. And typically when a CEO does this, you have scrutiny, not only from investors, but also from potentially regulators. And I think the willingness of him to, for instance, when he said he had funding secured to go private, and he didn't, right? I don't think any other CEO would take the risk of saying that, because there's the potential that the consequences could be severe. So I think that the reason why you have such strong bulls and bears is because I think, you have a CEO who's willing to do things that maybe some others aren't willing to do. and say things that others aren't willing to say that attracts a lot of, fans. But on the flip side, you have financial analysts who remember these things and keep him, hold his feet to the fire. And when he doesn't hit him, we think, oh, we got him. And, he hasn't been gotten yet. So I think that's why you have such the divergence. One other thing I'll highlight, everybody says, people just look at 2020 and say that's the entire history of Tesla. That's not the truth, right? In 2018, the stock went from 400 to below 200. Keep in mind what happened this stock really took off in October of 2019. Keep in mind what happened in October of 2019. The Fed did QE again. They did it via reverse repos, but they started injecting a ton of money into the market. And then the stock collapsed in March, and then it took off again when the Fed announced QE infinity, as did a lot of speculative stocks. So it's not just Tesla. The entire market, particularly the speculative stocks, right? The guys who don't make money and don't make profits, but promise you the world, like the Virgin Galactics of the world. And, these stocks that, are promising a story, but not producing money. I think that had a big and a lot to do with it. People credit Musk. I think they should be crediting Jerome Powell with the move in these speculative stocks. The problem is, if you look at CPI, inflation is ticking up. So the masses are going to pay for this. But I think that, that's not consensus yet. But keep in mind, right? CPI in November at 2%, plus 2%, or 2.4% annualized. The street expecting it to be 0.3% or 3.6% annualized in December. That's a very high amount of inflation, right? The masses don't own stock. 10% of the world owns, or 10% of the U.S. guys own, 89% of the U.S. stocks. So there is a price to pay. But again, I think Jerome Powell should get more credit than Elon Musk for this run up in speculative stocks, to include Tesla.
All right, Gordon Johnson.
Gordon, one more before I let you go here, and this is just going a little bit macro here on you with what you've seen happen with Alibaba, and I'm kind of torn. Looking to invest in the FXI in the Chinese markets. I mean, China's set to surpass the U.S. economy in 2028. That's much sooner than people expected. You look at what the U.S. market's done over the last 5 to 10 years, and then you look what the Chinese market's done, or the FXI, the emerging markets. Is this where should people, younger investors, maybe looking for maybe there's a global shift coming here. U.S. market could obviously keep going up, but and then I see this regulatory stuff that happens to BABA, and it kind of shakes me. Just with you follow the stocks that are affected by the the Chinese government with tariffs and everything. Could you give us a 5 to 10 year outlook on the Chinese index FXI versus the S&P 500?
Yeah, I mean, the S&P 500 has significantly outperformed the Chinese index, and I believe that 80 to 90% of that performance has nothing to do with fundamentals and has everything to do with the U.S. Fed pumping. I mean, they are literally pumping $140 billion of new money, newly created money, into the stock market indirectly, right? The way it works is, the banks, effectively buy treasuries from the Treasury Department. The Fed prints the money and then effectively, provides that money to the Treasury. So it's indirect, but the point is that money goes to the banks, and the banks aren't lending it out for the most part. What they're doing, the only thing they can do, interest rates are so low, the only thing they can do is buy stocks. So I think that, but the problem is that's creating now real inflation. Look, the commodity index just broke out in the U.S. So to answer your question, I think that emerging markets and non-U.S. markets over the next 5 to 10 years are going to outperform the U.S. market, because we're seeing concerning levels of inflation right now. And I don't think the Fed is really going to admit this at all, because they use PCE. They hide behind PCE versus using CPI, right? They're telling us prices have been flat for years. I mean, just go out and look at the price of a house on average in the U.S. since 2009 is up $50,000 versus minimum wage being flat, right? There's been massive inflation. So I think that, yes, I think the Chinese market will outperform the U.S. market over the next 5 to 10 years. However, I think that where you're going to get near-term outperformance, if I had to say a 1 to 2 year outlook, I really like the commodity stocks. I think you're going to get commodity price inflation. We've already seen it in steel. I mean, we've seen it in a lot of the commodity prices. We just haven't seen it flow through to the earnings. And while U.S. steel's up a lot, it's not up as much as the Neos of the world or the Teslas of the world. So I think you're going to have a rotation out of growth into value. And I think even if you have that, you can have significant outperformance in the commodity-based stocks, the steel players, the equipment manufacturers, even the rail plays. You could have outperformance in those stocks and still the market falls as guys rotate out of tech/growth into value, specifically commodities. So we really like the steel companies. We have a buy on Cliff and X. We really like FMG near term. We also like the uranium plays. We think uranium prices are going to trend higher. That's been a sector that's massively underperformed that we think is going to do well. So if the question is 5 to 10 years, we think emerging markets, and not that China's an emerging market, but also China do outperform the U.S. stock market as inflation becomes a problem here. But we think near term, I would be putting my money into those commodity plays versus the growth plays, as we think you get a rotation trade.
All right, that would be a quite a change in trend. Gordon Johnson, the founder of GLJ Research. Gordon, we always appreciate your time. Merry Christmas.
Thanks, Gordon. We really appreciate you coming on today.
All right.
Absolutely.
We always keep going along. So it is 9:01 already. Wow. Time flies. Let's just do like one or two more. Can we look at Fubo here? Because we talked about this when we were prepping for the show, but we didn't actually get to it over the course of the last hour. So let's talk about Fubo. It, of course, had that massive rip for, I guess, going back a couple of weeks now. And it is off those highs significantly in the last couple of days. Joel, why don't you pull that chart up and let's talk Fubo
sure.
for a second.
We were debating this one. I mean, it sure looks like it wants to get, at least retrace half of that move. You really broke out from 15, 62, 63. So, the news flow, analysts turned negative on it. You took out a double bottom. Now you're peeling back. I mean, it gets to the 50. I didn't pull it up. I'm sorry. Get back to the 50% area. At least for the first time, I think you're going to find buyers. I know Triple D. I don't want to sell this in the hole to you. I know you're widely bullish, so I got to pick my spot a little bit better than after it's come off $25. But
I'm bullish now. It got overdone. I know, and I know I was selling it way too early, and I kept a small piece because I think the story is still intact. I think this story carries the stock as much as nobody cares about the fundamentals of Tesla. I mean, Gordon Johnson said the best. I mean, a lot of the market isn't trading on fundamentals. When you analyze stuff from fundamental basis, companies that don't make money shouldn't be worth anything. But you can't look at it. You got to look at it from the story perspective. One, I think the streaming story continues to be hot in 2021. Two, this is also it's still got a little bit of a story with, sports gambling. So, I mean, all tied into that, I think the story still remains hot. With that being said, this stock got way overdone. It got way overdone. It went from 30 to 62 in
15
4 days.
Yeah. Okay. Okay. Yep.
So it's come back down now where, this thing gets into the mid 30s. I might buy more. So I have a small piece left. I'm playing with forever the house's money because I just kept a small piece. I kept 20% of the position, and I sold way more than I put into it because we know I originally bought this at $13 when Mitch brought it to us. So I think I'm going to hold on to the other piece, and I actually am thinking about buying more if this gets down into the mid 30s. I don't even know if it's going to get that low though. I think it turns today. So I'm going to go out on a limb, make a call here because that's what people like to hear. It's down 10%. You got Rich Greenfield on Twitter here who put a $7 price target on it, analyst, and he's been talking it down all weekend, just how much this is a bubble and this thing's going down, and that could be the case, or $8 price target, I guess he put on it, and that was a big catalyst on Thursday while stock sold off even harder. You have BMO downgrading, and then you have an analyst who's very vocal on Twitter, really talking it down, and putting an $8 price target on it. So it's getting hammered for those reasons. Is the story over, though? Ask yourself that question. I think do I want to catch the falling knife? No. But I think you're going to see some stabilization here. I think you're going to put in a low, and then I'm going to lean on that low as potentially getting in for a swing trade higher. So I don't want to catch the falling knife, but I'll look at today as potentially a turning point. I think it could turn today. So, and then if I get a low where I can lean on it, where it stops going down, then, I might add to the position as a swing trade. Right now, I still have a little bit in the longer term account, trying not to look at it. So I think the story remains hot. The market cap isn't, insane. It's not like it's a 50 or $100 billion company. I think it's $2.5 billion. It's a small little company still relative to where some of these other speculative bubbles are. So I think the story is still intact, and that's why I think the story remains hot in 2021. And I think eventually makes new highs again. So I'm staying on the Fubo train. Michael Pachter was on the show. He knows a hell of a lot more than me. He sounded fairly bullish on our show as well 3 days ago. So I'm sticking with it.
All right, definitely the pace of this selling is meeting some buyers here at the $40 area. So keep an eye on the pre-market low.
It's over as much as it was overbought, Joel. It's probably oversold now 3 days later. It just got cut in half, like basically from 62 down, so an actual half, I guess, would be lower than that, but it's got cut down, pretty substantially here, a 22-point fall on a $62 stock in 3 days. So I think it was overbought. It's given it all back. It's probably oversold. I think you're going to find some support here as you get into the 30s. I think you could even bottom here in the 40 area. So we're trying. We'll see what happens. It's a storied stock. It's going to be carried by people's opinions. That is the only thing driving it right now, because this one's disconnected from fundamentals too. But this opinions and story can carry the stock a long ways. You also have analysts like Michael Pachter and other analysts that, might be looking at this as, maybe this is the chance for me to raise my price target. So as much as you had some negative analyst action the last couple of days, I think there's a few analysts hiding in the weeds here that could actually get bullish on this story.
That's true. That's something you like to look at. And then so the volume, monster volume on the day that it peaked, and then it's sold off. So, maybe wait for it to, stabilize, maybe wait for the volume to come down a little bit, get all the sellers, all the weak hands out of there, get a double bottom or something to lean on. But I'd be more interested in the mid 38s here. That's halfway back on the move, but starting to show a little stability here, just around a nice round $40 area. Spencer, you want to wrap things up on this Matic Monday here?
I do. I know there's a lot we didn't get to. I wrote a few tickers down. We'll cover them at the 340 broadcast. I know we didn't cover any SPACs, but they're going to talk about 11 new SPACs today on SPACs Attack, 11 a.m. Eastern Time, right here on youtube.com/Benzinga TV. Here is our disclaimer to remind all of you that all the information from this show and all of our shows are meant to be used as informational purposes, not for investing or trading advice. Thanks to our guest today, Gordon Johnson. Thanks to all of you in our chat. There's the chat on YouTube, of course, the chat on Benzinga.com, and the chat on Benzinga Pro. We appreciate all the comments, all the likes, all the super chats. Let's see if we can get up to 300, 400 likes.
I'm surprised we didn't get more dislikes today.
Oh, we had a lot of people hating on Gordon.
Chat was fired up.
They were fired up hating on Gordon. And this is, something I value Gordon's opinion. Maybe it's right, maybe it's wrong. He's obviously been wrong on Tesla for a long time, but to say he's uninformed, to say he doesn't do his research, he does more research than anyone. I mean, the stuff he was saying is way more research than I've done on Tesla, way more research than the majority of people who own Tesla stock has. Is it completely disconnected from fundamentals? It's been completely disconnected for a long time. So just because you don't agree with his opinion, you don't have to agree with his opinion. You can buy the stock. But to just say he's uninformed, he's not uninformed. He's looking at it from a fundamental basis and doing more research than 99.9% of people who own Tesla.
Yeah, also,
not joking. Also, he's very informed.
You should want to hear someone who disagrees with you. Like if you're bearish,
there you go.
If you're bearish, you should want to hear a bull. If you're bullish, you should want to hear a bear. It can give you a new perspective and try to cover any blind spots that you may have on a thesis or whatever. So I always like hearing people that I disagree with on stocks or investment in general, because it gives me a new way to think about things. So
this is why we have a market. If we had all bulls on Tesla, there would be no sellers. I mean, this is, why we have a market. So you've got to have a buyer and a seller to match. So whenever you buy a stock, somebody else in the whole world has the opposite opinion because they are selling you that stock. Think about that. There is always whenever you say, I think the stock is going higher, somebody else thinks it's going lower, or they would not sell it to you. So this is why we have a market. This is what the beautiful thing of the markets are. So is Tesla, my opinion on Tesla, I agree with everything Gordon, a lot of things that he says. I think the stock's going higher just from technical reasons, though, because it's not selling off. It's up here again. I said it on Thursday and everybody gave me heat. I got heat for saying when it's 642, I said, it's not going down. It
That was
should
a
have
good
went
call.
down. It's not
It did it.
responding
I know.
well, and I think it's going higher. And you know, everybody's getting 650 was a big line in the sand. I got on board with that. I said if it got above 650, I think it's going to challenge the 695. Well, look at what it's doing. It got above 650. It's 675. So here I am, fundamentally bearish Tesla, long-term bearish Tesla, but putting a bullish case out. I put a bullish case out on Thursday. If you listen to the show, just technically this stock is not breaking. So you can be bearish something long-term and still buy it. You just got to be obviously close. And, you know, if the theme changes, you've got to get out. But you don't have to be short all the stocks you're bearish and long all the stocks you're bullish. As a trader, I go both ways all the time. If the technicals are telling me to buy something, if it's not selling off after getting added to the S&P 500, and obviously, you know, we thought that would be a topping event, and it was not. It was turning. You could see the turn happening. The buyers were emerging again. This looks like it's challenging the 695, and this could go to 700 again. So I'm going to stay in the bull camp on Tesla right now, despite agreeing with a lot of what Gordon Johnson said.
All right, so Tesla to 10,000 confirmed. That'll be it for us, everyone.
Overtime.
I'm only half joking. Everyone have a good rest of your day. Like I said, Joel and I will be back at 3:40 p.m. Eastern Time. Tunes and SPACs attack at 11 o'clock. Everyone have a good rest of your day. Good luck in your trades, and we'll talk to you later.